Hi everyone, good morning. I am Santosh Mahapatra. Today I will explain you the different types of income which are included while calculating the scope of total income on the basis of residential status of an SSC. In previous class, we have discussed the different category of income to be included on the basis of residential status. But today, I will explain you in details the types of income to be included while determining or computing the total income of an SSC on the basis of residential status. An SSC may be resident, not ordinarily resident, and non-resident according to the Income Tax Act. So today I will explain you the types of income in detail so that it will be suitable on the part of everyone to have a calculation or computation of total income of an SSC on the basis of residential status. Let us start the first one. The first one, income received in India. The income received in India. Yes. Income received in India is taxable in all cases irrespective of the residential status of the SSC, of an SSC. But a person must remember certain point while determining the income received in India. The first point, that is, the receipt of income refer to the first time when the recipient gets the money under his control. So any subsequent remittance or transmission of the amount cannot be treated as a income of the same person. If a person is transferring his money to any other account or individual, that cannot be treated as a receipt again. So the first point, that is. The second point is that the income may be in case or kind. The income may be in case or in kind. It will be taxable in the hand of the recipient. And the third one is that receipt means the net receipt. Receipt means the net receipt. I mean gross receipt minus all the admissible deduction and relief according to the income tax law. And the fourth point is that income is taxable either on receipt or accrual basis. If the income is not taxable on receipt basis, then it will be taxable on accrual basis. So that is the first category or types of income. That is the first category or types of income which are coming under the head income received in India. The second one is that income deemed to be received in India. Income deemed to be received in India. So here, what is the meaning of income deemed to be received in India? Income deemed to be received means it is not actually received by the SSC, but it is treated as a receipt under the provision of the law. Law says that it is a receipt. So it will be taxable. It will be treated as a income deemed to be received in India. So there are certain examples which income are treated as a income deemed to be received in India. So the first one, that is contribution made by the employer to recognize provident fund of an employee in excess of 12% of salary of the employee. The first one, I mean the income deemed to be received in India. The income deemed to be received in India. The first example, that is contribution made by the employer to the recognized provident fund of an employee in excess of 12% of salary of the employee, the first category. The second one, interest credited to recognized provident fund of an employee in excess of 9.5% per annum. The second category of income that is to be treated as a deemed to be received in India. And the third one is the taxable transfer balance from unrecognized provident fund to recognized provident fund. It will be treated as a income deemed to be received in India. And the fourth category of income deemed to be received in India, that is unexplained cash credit, unexplained investment, unexplained expenditure. So these are the income which are treated as a deemed to be received in India. And another category, that is TDS, tax deducted at source, in the hands of the employee, So these are the income which are treated as a income deemed to be received in India, And the third category of income accrued or arise in India. The third category of income. So here, income accruing or arising in India is taxable in all cases irrespective of residential status of the assessee. So here, an income accrues when the assessee obtain the right to receive, though he may not actually receive it. I mean, an assessee is getting the right to receive the income. Actually, he is not receiving the income, but the law has given right to receive that income. I mean, salary accrues where service are rendered. If an employee is working in India, his salary accrues in India. Similarly, if the goods are purchased and sold in India, the profit accrues in India. So that is the third category. That is the third category of income that is treated income accrued or arise in India. And the fourth category of income, I mean the most important one, that is income deemed to accrue or arise in India. So here, yes, there are certain cases income are deemed to accrue or arise in India, though it actually accrues or arises outside India. So the fourth category, that is income deemed to accrue or arise in India. In certain cases, income are deemed to accrue or arise in India, though it actually accrues or arises outside the India. So there are certain incomes. Let me explain the incomes which are deemed to accrue or arise in India. The first category of income through or from a business connection in India. So any income which arises directly or indirectly from a business connection in India is deemed to accrue or arise in India. So that is the first category of income to be treated as a income deemed to accrue or arise in India. The second category, income through or from any property or assets or source of income in India. So any income which arises from any tangible or intangible, movable or immovable property or assets, the source of income in India is deemed to accrue in India. I mean the source of income is in India. And the next category, that is any capital gain arising from a transfer of capital assets situated in India is deemed to accrue or arise in India. Deemed to accrue or arise in India. And the next category of income deemed to accrue or arise in India is that income under the head salary. Income under the head salary. So here, any salary including pension payable for present or past services rendered in India or for the leave period preceding or succeeding services rendered in India shall be deemed to accrue or arise in India even if received outside India. That is the next category of income deemed to be accrue or arise in India. And the next category, that is salary payable by the government of India. Salary payable by the government of India to the Indian citizen for service rendered outside India. So here another category of income that is to be treated as a income deemed to accrue or arise in India. Any salary payable by the government of India to Indian citizen, resident and non-resident, working abroad, working in foreign country, is deemed to accrue in India irrespective of the fact that salary accrues outside India and it is payable outside India. Though it is accrued and payable outside India, but it will be treated as a income deemed to be accrued or arise in India. However, in that cases, the allowances and the perquisites, the additional benefit, the allowances and the perquisites received from the government of India outside the government of, receiving from government of India outside India are exempt from tax, are tax free. And the next category, dividends paid by an Indian company. Dividend paid by Indian company. Dividend paid by Indian company. Income by the way of dividend paid by the Indian company is always deemed to accrue or arise in India, even if it is paid outside India. And another category of income to be treated as a income deemed to accrue or arise in India, income by the way of interest. Income by the way of interest. So here, first category under the head interest as income, interest received from government of India is always deemed to accrue in India. The second category of interest as income, interest received from a resident or non-resident person in India is deemed to accrue or arise in India if that loan taken for the purpose of a business or profession carried on in India by that person. And another category of income to be deemed to be accrued or arise in India, that is income by the way of royalty. Yes, the first category of income by the way of royalty, royalty received from government of India is always deemed to accrue or arise in India. And the second category of income as royalty, that is royalty received from a resident or non-resident person in India, is deemed to accrue or arise in India if in respect of any right, property or information or service to be utilized in a business or a profession carried on in India by that person. So that is the category of royalty as a income. And another category of income to be treated as deemed to be accrued or arise in India, that is income by the way of technical fees. Technical fees. So technical fees received from the government of India is always deemed to be accrued or arise in India. And the second category of income is a technical fees. Technical fees received from a resident or non-resident person in India is deemed to accrue or arise in India if it is in respect of technical services utilized in a business or profession carried on in India by that person. So these are the income